So
Um,
let's start with you know what? Let's start off with your victory of Palantir. Because I
okay.
know everyone's gonna want that part first. So let's get that out the way.
Okay.
Has your conviction at all changed in Palantir?
No, I mean, I was expecting kind of what we had seen for the quarter. I wasn't expecting anything to be too crazy in terms of updates to the company at all. I did have the opportunity to listen to the earnings call. They said everything that I was expecting. Nothing really changes, right? I mean, I think it's just business as usual, and cool to see that Amit and friends had a crap ton of people watching. But to me, I think it's just interesting and cool to see that you're continuing to see the customer counts grow. Revenue grew 1% more than they expected. I think they were accounting for 16%. They ended up getting 17% growth. Fourth quarter of consecutive GAAP profitability, eligibility for the S&P 500. That's what everyone's kind of been banging their fists on the table for. Um, Commercial revenue for the US growing 33% every year over year. It's being dragged down by the government businesses, which is only at like 10% year over year. So there's that piece. And I think the cool thing that I like to hear from the team was they were trying to aim for, within the next year or two, $1 billion business strictly in US commercial kind of going forward. Cool things that I still like to see in terms of opportunity going forward was we're at about mid 20s% cash flow margin and operating margin. And as everyone knows, the where is it in here? The operating there, where is it? It's in here somewhere. Yeah, the gross margin is like 81, 82%. So just based off of how much OpEx the company kind of has, if they continue to grow at the revenue pace that they kind of are at, let's just say they're able to get back to 20% revenue growth over the next 2 to 3 years, you're going to be at a revenue of around $3 billion because they're going to end this year at about 2.2. Add, let's just say, 40, 50% from that in 2 years because you're growing at 20% per year and it compounds on itself. You're going to be close to $3 billion here by fiscal year 25 or early 2026 on a trailing 12-month basis. That being said, if you're still hanging out at a $1.5 billion OPEX, let's just say $1.7 billion OPEX, then this thing's going to be generating about a billion and a half of cash flow back to the business. And so I can start to understand a little bit now why the company is worth 35 to 40 billion dollars. It's still expensive, right? So don't get me wrong in that respect. I mean, it's not a screaming buy, but going from 500 or so million on a trailing 12-month basis for adjusted free cash flow to 1.5 billion in a matter of a year or two, it starts to make a little bit more sense. So if you were to say, okay, trailing 12-month, $500 million in cash flow, then you start to divide it. It's a $38 billion company. You're like, okay, so it's at a 70x to 75x price to cash flow. That is expensive, but it's not absurd, right? And so you can start to see where things are kind of now. If you're able to keep that expense base really low, you're able to grow your revenue by 20% a year for 2 years, and you get this to the $1.5 billion range, then it starts to make a little bit more sense as to what the current valuation is. Now, do I still think it's a little bit expensive here? Of course. I think that this is always going to be a richly valued company. But I think that the feeling that I got before waking up today was, and then I'll hand it back to you. The feeling I got today before waking up and seeing these numbers was, is this a company that I think will eventually get into the hundreds of billions of dollars, right? Or even break $100 billion in, let's just say, the next 7 to 8 years when you get to the 2030 timeframe. And I was kind of scratching my head. I'm like, I don't know. It seems like things are taking a little bit longer than I was expecting, but after seeing the customer count growing today, it gives me a little bit more hope, but I'm still not completely convinced that, we will get to a $350 billion market valuation in the next, let's just say, 10 years, right? I think in order to get to that point, you're going to have to really fight. And these numbers are going to have to get better than they are today. I think this is a step in the right direction, but by no means am I seeing the 30% revenue growth that Alex Karp was talking about just a year and a half ago. And so maybe I'll be pleasantly surprised. You know, the customer count did grow pretty expansively year over year. And these boot camps do seem very promising. You know, the conversations that they were kind of saying was they're planning on having at least 100 or so boot camps just this year alone, which, you know, is more than what they've done, you know, probably over the last 20 years of kind of rollouts. They've been able to shrink their, I guess, onboarding process from 1 to 3 months to less than 5 days. And in some courses of action, what Alex Karpa said is less than 6 hours. And they're doing exactly everything that I've seen them do personally, you know, because I have worked with the company before and still do actually. But what took them, let's just say 5-6 months to do with us at Undisclosed Oil Company, it seems like they're able to kind of do in a lot shorter fashion, which is kind of what your problems with them were. I mean, the whole embed yourself in a company for 5 to 6 months seems very time consuming, seems very expensive, seems very, you know, lackluster in terms of being able to go directly to kick things off. So able to shrink that market and that time consumption down to something that could be 1 to 5 days allows people to do more of a onboarding process they could take home, and also seeing them, you know, really get legacy systems completely, I don't want to say dismantled within a matter of 5 to 6 days is really cool, but it makes a lot of sense. It's very similar to my experience, but it seems like they've really perfected the way to onboard people. And before it was more of like a discovery of leading people to the answer in a very soft manner. And I think a lot of industries and a lot of people and a lot of knowledge over the past 4 to 5 years since I've been onboarded with Palantir and Foundry specifically has come forth, like in terms of digitalization and people's knowledge about systems and actual categorization of data and actually being able to manipulate data for better use in business intelligence has come a long way from where I was 5-6 years ago. And the tools that are out there are a lot better too. So the competition is just more fierce in general as well. And so I think in reality, these guys have really perfected it after doing it probably now hundreds of times. You know, some of these people having to do it hundreds of times. They've really said, okay, how do we get this down to its simplest form? And I think it's really starting to pay dividends. But I'm really curious to hear what your thoughts are.
I mean, it's a very interesting thing to see. I think for me right now, I'm just looking over their pretty much their quarterly deck. Yeah, they're doing well, man. I think these boot camps were a great addition to getting their product out there. One of the biggest complaints that guys like me had was that, you know, you can't go out there and just keep telling people, oh, we have the best software in the world. Yeah, okay, can I see it? No, you have to get a contract with us first. Like, that's stupid, right? That's like saying I have the best car in the world, but you can't drive it. Like, you can only drive it once you're off the, you know, once you buy it. So that whole process was just not working. And I think they really flipped the script and they are going their traditional SaaS route, which is good. I like seeing that. The government slowdown is not necessarily a big problem, only because just how lumpy the government revenues tend to be, you know, from quarter to quarter. We had government shutdowns here and there and all this other nonsense. And I think long term, if this Ukraine thing gets solved, that'll be, you know, Palantir will benefit significantly because they were one of the few companies that were willing to partner with the Ukrainians to basically see everything through. So in terms of like a strong partner, they've definitely got someone there. The commercial growth, that acceleration in commercial growth is actually kind of impressive. That is what I like seeing in companies. Though I do think the valuation is stretched, you know, especially now, I do think that I'm going to readjust my entry point if I do get a chance to re-enter the position. It'll probably be around the 12s, I think 12 is a pretty fair value going forward. But man, that adjusted free cash flow, that is nuts. That is a great thing to see. Whenever you have free cash flow, I always have this sentiment that this line of thinking that cash flows, cash flows, cash flows. That is what's going to give you the ability to make the changes in the business that's necessary in order to make the share price like really, really worth it. So right now, that adjusted free cash flow is going to do wonders for them on a TTM basis. Their free cash flow is almost $500 million, which is kind of nuts if you think about it. But still, the valuation that it currently has, which is I think it was almost $38 billion, it's definitely not worth it, especially considering the growth rate is, still slower than what was projected out. So I agree with you on that. I don't think that this company gets to the 100, $200 billion valuation at its current growth rate. It's definitely going to have to step things up. But what's cool is that they are taking the right steps in that direction. So hopefully I get a chance to add a little bit when it gets back down to 12. I think we'll see it get back down to 12. I've seen too many strong SaaS businesses get hammered. I think today there was a little bit of extra euphoria that really carried them forward, but
everything was up, man. Rocket
Yeah,
Lab, Dutch Bros, everything.
I know, but they were especially like these guys were especially boosted. I mean, you're talking about almost 20% intraday, which I saw. I was like, God damn, thank God I'm not the type that shorts or buys puts on things like this. Because I mean, I'll buy puts, but only if I feel like it's there to protect me against some downside, never to like speculate on downside, because you never know with things like this.
Right.
It's kind of shocking to see, because it's like Google misses by 200 million on cloud revenue. Everything else is fucking golden, and yet they take a 10% dump. Palantir, on the other hand, grows their revenue just by a little bit, and it's like boom, everything goes ape shit. So it just goes to show you that the market in the short term is never what you expect it to be, no matter how good of a due diligence that you do. You just have to kind of accept that the market will do what the market does, and that's about it.
Well, I will say, I mean, I think the big piece that I believe that they're truly starting to see is they're seeing higher valuation deals coming in early and very quickly. And I think that that's something that can build. One thing that bothers me still is the net dollar retention. Somewhere within here is still only 107, 108%, which I'm like hoping that goes back to the 111, 112, starts moving that in the right direction, because Jesus, I mean, I recognize that they're not incorporating contracts that are less than 12 months old, but I still would like to see, these big contracts really move in the right direction. Because you think about it, it's, who's leaving, right? Somebody has to be leaving, because you see these big contracts from the Army going up in terms of total value. So that NDR is obviously very positive, potentially up to 150 to 200%. And so some people have to be leaving. Maybe it's too complex for them. Maybe it's not the right fit. Maybe they don't necessarily need as much. And so that's where I'm like still a little bit of a thorn in my side. Like, why is the NDR still only 108%, whereas Snowflake is, I think, in like the 120, 130%. I think they're doing really well. And so I think that in that respect, we'll see that. I think they report either next week or the week after. I'm curious to see how their NDR looks kind of going forward. But 45% year over year customer growth is nothing to scoff at, right? I mean, that's, if you have 2 years worth of that, you're doubling your customer count every 2 years, and then some, because obviously the rule is 72. I mean, you'll be doing probably, 125% customer count growth every 2 years. That's impressive, and so if you're able to capture in even just like a $1 or $2 million deal associated with that, that helps in that respect. So kind of curious to see where it goes from here. 8% quarter over quarter, and 9% quarter over quarter customer count growth. I mean, that's, especially when you're getting into these bigger numbers, right? You're talking about adding a decent amount of clients every single month, or every single year. So even just getting $1 to $2 million contracts ends up being something that helps push the revenue kind of forward. But I think that this is a step in the right direction, but it is not where we need to be as of yet. So I'm slightly appeased. Do I think it's going to go back down to the 12s, Chris? I think that might be hard pressed, but I'd easily see it going back to the 14, 15s. But you're not wrong. I mean, companies, especially if the macroeconomic environment takes a dip in early 1Q next year, before earnings or something like that, there might be a couple days you get into the 12s. So it's not out of the realm, but we'll have to, I guess, see from there. Do you want to move on to Upseller or Apple, or do you think there's anything else you want to talk about with Palantir?